It is 8:35 a.m. Pacific Standard Time. It's the 26th day of February 2026. This is episode 1266. Man, that's a lot of sixes, dude. A lot of twos. A lot of twos and sixes in this day's episode of Bitcoin. And Jane Street is all over the place. If you have no idea what the hell I'm talking about, you will after this one, because it's essentially the first half of the show. That's how much weirdness is going on with this. Well, let's just call them a trading outfit right now, and they seem to be causing problems. Then in the second half of the show, we'll mix it up. I've got some Indiana Strategic Reserve bill going through. ETHZilla, the Ether holding company or treasury company or whatever you want to call it. I think they are the canary in the coal mine for Ether holding companies. We'll get into that one. And then Nvidia earnings, if you hadn't heard about it, there's going to be some ramifications here for AI. And then Discord. And we all know what's going on with Discord, but there's a framing in this particular article that I want to get to about that. And that's going to be the show for the day, man. I mean, Jane Street's going to take a little while to peel back. So let's just start it off. And this one out of Forbes, Boaz Sobrado is writing this one. Jane Street's two-continent problem. They're barred in India and sued in crypto. Within days of being sued over the $40 billion Terra collapse, Jane Street Capital appeared to scrub every post from its X account, according to multiple observers on the platform. The firm, which generated $20.5 billion in net trading revenue last year and handles roughly 10% of all U.S. equity trades, now faces allegations of insider trading in crypto markets. It's not the first time a regulator has accused the quantitative trading firm and market maker of exploiting privileged access to extract outsized profits. I need to pause because there's a lot to unpack in just that first paragraph. First, the accusation that Jane Street is deleting or has already deleted every single post or tweet that they've ever done on their X account. A, they do have an X account, and they started that account when it was Twitter back in 2018. B, there are no tweets on that account as of this morning. Nothing. There's nothing there. They follow 0 people. But they have something like, I don't know, let's just call it 15,000 followers. So we've got an X account here, started in 2018, doesn't follow anybody, has 15,000 followers, and yet hasn't ever tweeted anything. Or rather, their Twitter account has nothing in it. It's just their avatar and a brief description of the company, and it looks really professional. I mean, it's well done. It's not like, I don't know, an X account that somebody just throws up there. I mean, it's professionally done. It is, in fact, Jane Street Capital's or Jane Street Group's official X account. We know. What we don't know is whether or not they've ever actually tweeted from that account. I'm seeing several people who are saying they didn't scrub their account. They've never tweeted from the account. Grok says differently. There's a guy that asked Grok, hey, has Jane Street Group ever tweeted off of this account? The answer from Grok is absolutely, and it looks like they've scrubbed their entire account as of today. Forbes is reporting, and this is Forbes, right? From Forbes.com. I mean, they're mainstream media, but they've got better access to information than I do. I'll say that. They're saying that Jane Street has indeed scrubbed tweets. There's several other articles saying that they have scrubbed all their tweets, but there's several other people who are saying they've never actually tweeted from that account. So do we know, matter of factly, that Jane Street has indeed scrubbed their Twitter account? We don't. Somebody who knows better. If anybody, here's what we need. A definitive screen capture that's not AI generated, an actual honest to God screen capture of Jane Street Group's Twitter account with an actual tweet coming out of that account. If somebody can provide that, that would be freaking awesome. And it would be better to have 3 or 4 or more of those screenshots, because we don't know if they have scrubbed their entire account. Let's say they've been tweeting since 2018. If they've actually scrubbed every single tweet, that is tantamount to taking all of your documents out into like Times Square, New York City, in the middle of the freaking day at lunch hour and shredding the documents in full view of everyone. That's exactly what that's like. Okay, that's the first part of this paragraph. The second part is understanding that Jane Street generated $20.5 billion in net trading revenue, and they handle 10%, a full 1/10 of all equity trades in the United States. That is a massive chunk of equity trading. All right, it's not Bob's backyard barbecue and trading firm. This is a huge chunk. So keep this in mind as we go through this. Continuing, the federal lawsuit filed February 23rd in the Southern District of New York alleges that Jane Street used inside information from Terraform Labs to avoid more than $200 million in losses before the Terra Luna ecosystem imploded in the month of May 2022. Jane Street has called the suit desperate and a transparent attempt to extract money, but the allegations land differently when read alongside a 105-page enforcement order that India's Securities and Exchange Board published last July, documenting what SEBI described as a strikingly similar strategy on the other side of the world. The complaint, brought by Todd Snyder, the plan administrator overseeing Terraform's bankruptcy wind-down, names Jane Street Group, Jane Street Capital co-founder Robert Granieri, and 2 employees, Bryce Pratt and Michael Huang. The filing describes a pipeline for material non-public information running from Terraform's engineering team directly into Jane Street's trading desk. Pratt, according to the complaint, interned. He was an intern at Terraform Labs during the summer of 2021, and then he joined Jane Street that September. By February 2022, he had set up a group chat called Bryce's Secret that included a Terraform software engineer and members of Terraform's business development team. In one exchange cited in the filing, the Terraform engineer wrote, quote, "Bro, we all know who the buyer is. It's where you work, Jane Street," end quote. When asked about the legality of what Jane Street was doing with the information, Pratt allegedly responded, quote, "Everything. Probably, yeah. If Jump can legally do SMTG, we probs can too," end quote. That's a direct quote. That's literally what it says. I do not know what SMTG is. I don't know what it is. I just don't. Anyway, the complaint's central allegation concerns May 7th, 2022. That day, Terraform withdrew $150 million UST from Curve 3 Pool, a decentralized exchange, as part of a liquidity migration that had not been publicly announced. Within 10 minutes, a wallet linked to Jane Street pulled $85 million UST from the exact same pool, the largest single swap the platform had ever processed. The combined withdrawal destabilized UST's liquidity. Within a week, The Terra Luna ecosystem had fully collapsed, wiping out roughly $40 billion in value. According to the complaint, this trade, quote, would have been impossible without inside information, end quote. Jane Street's response: the losses were caused by the multi-billion-dollar fraud perpetrated by the management of Terraform Labs. Terraform founder Do Kwon was sentenced to 15 years in prison in December of 2025 for wire fraud and conspiracy. The companion $4 billion lawsuit filed in December 2025 accuses Jump Trading of a separate agreement, a secret deal to buy Luna at 40 cents when the market was pricing $110. The complaint is heavily redacted. Specific profit figures, internal communications, and details of Jane Street's trading strategy remain under seal. The case includes 13 counts spanning insider trading, securities fraud, Commodity Exchange Act violations, unjust enrichment, and breach of confidence. Now, over in India, the Terraform allegations are unproven. But in India, regulators have already reached their own conclusions about Jane Street's trading practices. In early July 2025, SEBI issued an interim order against 4 Jane Street entities: JSI Investments, JSI2 Investments, Jane Street Singapore, and Jane Street Asia Trading, barring them from Indian securities markets. The 105-page order accused Jane Street of manipulating the Bank Nifty and Nifty 50 indices across 18 derivative expiry days between January 2023 and March 2025. SEBI calculated total profits of 36,502 crore rupees, roughly $4.3 billion. The regulator described a two-phase strategy it called an expiry day trap. In the morning session, Jane Street's entities would aggressively buy index stocks and futures, often accounting for more than 20% of the market volume in individual securities. This pushed the index higher. Then in the afternoon, they reversed course, dumping those positions. The index fell back. Short positions or short option positions built up during the morning phase became profitable on the decline. In a single day, January 17th, 2024, the strategy allegedly generated 735 crore rupee, according to the order. SEBI described the trades as sharp, large, and aggressive, creating, quote, a false or misleading appearance of market activity. When India's National Stock Exchange issued a written warning in February 2025 telling Jane Street to stop, the firm acknowledged the letter but continued the same practices. SEBI called this egregious behavior in clear disregard and defiance of the explicit advisory, end quote. Jane Street dismissed the SEBI probe as biased and predetermined. It appealed to India's Securities Appellate Tribunal. That hearing was adjourned February 25th, 2026. The same week, the Terraform lawsuit was filed in New York. SEBI impounded 4,843.5 crore rupee, approximately $566 million worth of alleged unlawful gains. The legal theories differ. The Terraform case alleges insider trading through misappropriation and confidential information. The SEBI order describes market manipulation through trading patterns, but both describe a similar structural logic. Use a privileged position to move one market, then harvest profits in the derivative layer sitting on top of it. In India, according to SEBI's account, Jane Street pumped index stocks to profit from short options positions. In crypto, the complaint states that Jane Street used inside knowledge of Terraform's liquidity withdrawal to unwind its exposure before the collapse hit. In both cases, the allegations center on an information or access advantage that ordinary market participants did not and do not have. That structural similarity takes on added weight given Jane Street's current role in crypto markets. The firm was one of the original 4 authorized participants, or APs. Remember that term because it's going to come back in a couple of these other stories. One of the original 4 authorized participants for BlackRock's iShares Bitcoin Trust, the largest spot Bitcoin ETF, and remains to this day one of the 4 approved for in-kind creation and redemption of shares. Its most recent 13F filing showed roughly $790 million in IBIT shares as of the fourth quarter of 2025. As former hedge fund manager Michael Green has noted, that position, quote, is almost entirely offset by undisclosed options and futures positions. Former prop trader Ryan Scott was more blunt, quote, anyone posting this as bullish is committing a capital offense, end quote. Current 13F disclosure rules require reporting long equity positions, but not future swaps or most over-the-counter derivatives. Jane Street's actual net exposure to Bitcoin, whether long, flat, or short, is completely unknown. The SEC has proposed expanding beneficial ownership definitions to include cash-settled derivatives, but the rule remains unimplemented. Both cases are in the early stages. Snyder filed the Terraform suit days ago. The SEBI appeal sits in adjournment. Jane Street denies all claims in both jurisdictions. But the firm now faces scrutiny on 2 separate continents, with regulators and plaintiffs describing variations of the same concern, that a trading operation built on speed and information advantages may have crossed lines that the current disclosure framework was not designed to police. For a firm that serves as gatekeeper to the largest Bitcoin ETF and moves billions through crypto markets annually, the question isn't just legal liability, it's whether the infrastructure around digital assets has matured enough to keep up with the firms operating inside of it. Okay, this paints a broad picture of what the hell's going on with this Jane Street issue, but this is just the framing. There's some detail work that we need to get into. And the way that I'm going to do that is I'm going to go and read from tftc.io. This is Marty Bent. He's got a Bitcoin brief, and he's looking at the same thing from a different, not a different perspective, but look at it like the Bible, the New Testament. There's 4 books about the life of Jesus Christ, right? Each one of them picks up different details, and you need all 4 of them to form a complete picture. Think of looking at a house, and if you only see the front and you don't see the back, then you don't know that the backyard is, I don't know, completely trashed, right? You need somebody on each side of the house reporting to each other what they saw so that you can get a complete picture of the house. I want to read this from Marty Bent because he's on another corner of this house, and he says, Jane Street hit with federal lawsuit as Bitcoin surges. The plot thickens. Jane Street, the high-frequency trading firm at the center of allegations that it may have been suppressing Bitcoin prices around 10 o'clock each morning, every trading day, is now under serious legal scrutiny after a federal lawsuit was filed against them Monday. Jeff Park, CIO at ProCap, laid out a compelling timeline. Since the lawsuit landed, the suspicious 10 a.m. Bitcoin price drops that have been occurring with unusual regularity appear to have stopped. Here's what makes this worth watching closely. As LPC Capital Chi noted, if Jane Street was trading against its clients and precipitated the leveraged unwind from $126,000, Bitcoin is going to run it back significantly higher, end quote. That's the crux of the allegations. The theory. Jane Street may have been using its market-making position to create synthetic supply through derivatives while suppressing the price at predictable intervals. It remains unproven, but the circumstantial evidence is piling up. The market reaction since the lawsuit has been notable. Bitcoin is up over 10% since the filing, breaking through the $68,000 barrier as buying pressure that may have been constrained finally found room to breathe. Google searches for how to buy Bitcoin are now at a 5-year high after being, honestly, and this is me pausing, after being damn near zero for kind of quite a while. But now all of a sudden it's at a 5-year high, suggesting that retail interest is surging in the wake of these revelations. If the manipulation allegations are proven to be true, the consequences for Jane Street would be severe. Securities manipulation at this scale, if confirmed, carries serious penalties. More importantly for Bitcoin, it suggests the manipulation was real, systematic, and profitable enough that they'd risk federal charges to cover it up. The fact that Bitcoin immediately rallied 10% after the alleged manipulation stopped tells you everything about how much artificial selling pressure was being applied to suppress the price. Okay, that's the end of what Marty Bent has to say. We still don't know. So let's proceed on this Jane Street action very carefully. And I swear to God, I think that they probably were. Okay, my position, my gut feeling is that the folks over at Jane Street are just as much of pieces of shit as anybody else on Wall Street. But unless there's rock solid proof, I can't say either way. I have to remain neutral. Just like the whole thing with, did they erase their Twitter account? Did they nuke all their tweets? I don't know. I've never actually looked at Jane Street Capital's Twitter account before in my life, so I would not be able to have firsthand evidence for myself or to be able to tell you about whether or not they've actually ever tweeted from that account before. And if they had, and now all those tweets are gone, that would be proof that they did indeed nuke their entire timeline, which is, or rather would be, suspicious. I got a bad feeling about this. Let's put it that way before I move into this next piece, and then we'll end the whole Jane Street stuff, because I'm trying to figure out how this works with Jane Street. If they have been suppressing the price, yes, they're in trouble in India. Yeah, they're in trouble over here. That the Forbes article didn't really get into Bitcoin price suppression. Now we've got this third wheel spinning. You know, they screwed up over in India, and they screwed up over here with the Terraform Labs, but have they been suppressing the price of Bitcoin through derivatives? And if so, how does that actually work? So I kind of put together an explain like I'm a little child kind of thing. And I've come up with this. And I'm going to try to do this in a way that doesn't confuse people. So bear with me. Just please bear with me. I'm not an economics professor. Imagine Bitcoin as a pile of real toys. And you're a kid. You like toys. We're all children. We love toys. We like to play with toys. We like it when our parents buy us toys. And we love toy stores. We love going to a toy store. And if we envision Bitcoin as a pile of real toys, that kind of kicks us off, because a Bitcoin ETF share works a little bit like a toy coupon, and people trade coupons all day long. Authorized participants, remember what I said about APs? They act like special store employees who can print new coupons or trade coupons for toys directly with the warehouse. Special workers can sell coupons that they don't have yet. They don't have the coupons yet. They haven't even printed the coupon. They could print the coupons, but they haven't actually printed the coupons yet in this particular case, because normally, if someone is selling something that they don't own, rules make them prove that they can at least borrow it first. The APs get a special pass because they can always print coupons later through the ETF's create redeem process. If a coupon costs less than the toys that it represents, a smart buyer should buy the coupon, swap it for the toys, and make the price line up again. Yeah, I don't want to pay $15 for the G.I. Joe. I want to pay $10 for a coupon that I can redeem for that G.I. Joe. That's sort of that's sort of where we're at here. That's what you should do. That's the smart move, right? But instead of buying the real toys or spot Bitcoin, they can buy a, quote, promise contract Bitcoin futures that often moves similarly. If they use that shortcut, nobody actually has to buy the real toys today. So the normal coupon is cheap, therefore buy coupons so you can use them to buy toys. Fixing mechanisms can actually get weaker. Before, creating new ETF shares forced a cash payment that then forced the fund to buy the real Bitcoin. But with in kind, the AP can deliver Bitcoin directly, but later, often quietly, maybe through over-the-counter desk trading, which reduces the automatic, quote, go buy toys right now effect. So it's paper. At this point, they're not even okay, look, I've talked about friction points before. And if you have too much friction and a human has to interface with a system that's got a lot of friction, they don't want to do it. It's too damn tiring. But if you ease up the friction a little bit, then it makes it easier for the human to interact with, I don't know, your website to buy your product. Okay, let's put it that way. But if you take all the friction away, though, then all of a sudden something changes. You know, the seller can't really tell if the buyer actually wants their product because it's almost too easy to get a hold of the product. I know this is kind of a bad way to put it, but what I'm getting at is that the friction here that has been alleviated is the actual purchase of the underlying asset itself. And we see this across all commodities: silver, gold, oil, natural gas, liquefied natural gas. It doesn't matter what it is. Instead of actually going through the friction point to say, okay, we're done with futures, we're done with derivatives, we're now here where the rubber meets the road, we've got to pick up the actual commodity. That's been bypassed. It's a complete disconnect from the actual commodity itself. In this case, buying Bitcoin at spot. If it turns out that Jane Street has been doing this, then we have our answer for all the people that have been looking at this, and myself included, who's going, this price doesn't make any sense given macroeconomy globally and the rules, the consensus rules of Bitcoin that require Bitcoin to never surpass 21 million coin. If this is true, all of a sudden, all of what we've been seeing and all the questions we've been asking make sense. I want it to be true. And I don't want it to be true because I know all the guys at Jane Street personally, and I think that they all suck as human beings. They probably do. I don't know. I've never had a beer with them, so I can't tell you. What I can say is that it would just give me an answer. Except here's the rub. We don't know. We just don't know. They have more evidence about their chicanery over in India than we do with their chicanery of Terraform Labs, although that looks pretty solid. However, this whole notion of have they been using paper Bitcoin to suppress the price of Bitcoin, that one just started spinning up like last night. There have been suspicions, but now it's in full blown, it's out in the open. Again, it is a we'll have to wait and see issue. But the story marches on because Zach XBT names Axiom in an investigation into alleged employee insider trading. It's not Jane Street, this is Axiom, but I'm starting to get a sense that we may be blowing the lid off of a whole lot of market chicanery that's been going on behind the scenes for decades. And I hope so, because none of these markets make sense. Not just Bitcoin not making sense. None of these markets make sense. Gold being as low of a price as it was for as long as it was a clear sign of suppression, but nobody's been able to actually prove it. Maybe Zach XBT and the whole Terra Luna thing and the India thing and Jane Street suppressing Bitcoin price, if it's true, maybe it's all part of something more systemic. And James Hunt from The Block is writing this one. Blockchain sleuth Zach XBT published an investigation on Thursday naming crypto trading platform Axiom and alleging that employees abused internal tools to track private wallet data following days of speculation sparked by his teaser post previewing a probe into insider trading. Axiom, founded by Mist and Cal in 2024 and backed by Y Combinator's Winter 2025 batch, quickly became one of the most profitable companies in the space, generating more than $390 million in revenue to date. He said, Zach XBT said, he was retained to independently investigate allegations of misconduct at the firm after receiving reports. So in the post, Zach XBT alleged that Brooks, Broox, a senior business development employee based in New York, used internal customer support tools to access private wallet data tied to Axiom users. In recordings cited in the investigation, Brooks said he could track any Axiom user via referral code, wallet address, or user ID, and described researching wallets gradually so it doesn't look that suspicious. And that's a quote. When he's so it does not look that suspicious is in direct quotes. So that's Brooks somehow saying that. I guess on recording cited in the investigations, it said that Brooks quoted, so it does not look that suspicious. That's pretty incriminating, dude. Zach also alleged that Brooks shared screenshots from Axiom's internal trading dashboard showing wallet addresses linked to specific traders, basically doxing them internally, and helped compile a list of private wallets belonging to key opinion leaders in crypto. Private wallets belonging to key opinion leaders in crypto. Several individuals whose wallet data appeared in leaked screenshots independently confirmed the accuracy of the information attributed to them, according to the sleuth. The investigation further alleged that Brooks and associates discussed plans to use privileged data access to profit from trades, including outlining a plan to help another Axiom team member profit $200,000 by abusing internal tools. Zach XBT said he identified Brooks's primary wallet and linked addresses, though he noted that confirming specific insider trade tied to those wallets would require access to Axiom's internal logs. Axiom acknowledged the allegations and said it had taken steps in response, according to a statement the company provided to Zach XBT. Quote, "We are surprised and disappointed to hear that someone on our team abused internal customer support tools to look up user wallets. We have removed access to these tools and will continue to investigate and hold the offending parties responsible," the company said. Quote, "This does not represent us as a team. We have always tried to put the user first." Yeah, put them first under the bus, I guess. "We'll share updates on our Twitter as we learn more," Axiom continued, pausing to say, "and I hope you don't nuke your timeline." Zach XBT said he contacted Axiom prior to publishing the report and described the internal access controls at the company as unusually permissive, noting that employees could view extensive wallet and transaction data through internal dashboards. He also suggested the case could fall within U.S. jurisdiction given the location of the employees involved. That probably means the Southern District of New York. The investigation follows intense speculation on prediction markets after Zach XBT teased the probe earlier this week. A Polymarket contract titled, "Which Crypto Company Will Zach XBT Expose for Insider Trading?" drew roughly $27.6 million in trading volume ahead of the publication, with traders betting on various firms including Axiom, Meteora, Pump.Fun, and others. On-chain analysts also identified unusual trading activity tied to the speculation. Look On-Chain reported that one anonymous trader wagered more than $50,000 on Axiom being named while odds were lower before closing the position for a $39,000 profit in one single day. Zach XBT had earlier acknowledged the prediction market dynamic in posts on X and said leaks were possible because, quote, a few people had to be interviewed for the case. Two major things are dropping out of this story from the block. One, Axiom probably dirty dealing under the table. The whole thought of a guy saying, let's look at private wallet data and see what they're doing. But then let's make sure that we're looking at the wallets that are tied to what's known as crypto influencers on social media. It's a lot of information to be able to dig through and have access to for quite a while to determine how you're going to trade against that. Because how long did they have access to this? How long has this been going on? I don't know. I'm not Zach XBT. I'm sure that that'll probably come out. But the second thing that drops is this Polymarket bet. I'm not accusing Zach XBT of anything. What I am going to say is that it should not escape our attention that Zach XBT would be in the perfect position to wager a bet on Axiom on Polymarket because he was the only one who truly knew, except for the other guys that were interviewed for this investigation. They also knew. And they actually have more of a reason to bet that it was going to be Axiom that was exposed because they kind of knew that it was. They kind of knew who it was that was interviewing them. They knew who they worked for. And all of a sudden, there's this bet over on Polymarket. If Axiom goes under and their jobs get scuttled, they might be able to have a nice little golden parachute. This Polymarket and Kalshi shit is going to get out of hand. It's going to become so bad. I can't, and again, I have no evidence whatsoever if Zach XBT did or did not place a bet on Polymarket for it being Axiom. I don't know Zach, right? And I'm not saying that. That is not an accusation. I'm saying that the possibility was completely open for that to occur. And it's going to get worse. It's going to get worse. Now think of every federal investigation that is now ongoing. Like, let's say that somehow or another I get called into some federal investigation that has something to do with, I don't know, economics or something like that. And the first thing that I do is piece together kind of why am I being asked these questions? You know, like, and like what names can I actually Google after that? And then start looking on Polymarket for those names or for that information. Anything that I can use that I have direct knowledge of, that I gained in a closed room, that was not visited by a reporter and is definitely not going to be known by the public. What information did I get that I can use on Kalshi and Polymarket? Or can I start a market on Kalshi and Polymarket and get enough people to propagate that where I know what the real outcome might actually be? Every federal investigation, every SEC investigation, every FBI investigation, if there's anything tied to economic markets and beyond, by the way, is all now fair game for the people being asked the questions, or the investigators themselves, or the investigative assistants going to Polymarket and Kalshi and laying down some bread. See what I'm saying there? But we're not quite done yet, because Morgan Stanley has future plans for Bitcoin trading, lending, and custody. I wonder if Morgan Stanley is going to engage in any of this chicanery. Bitcoin Magazine, Micah Zimmerman. Morgan Stanley wants to expand its digital asset offerings, including a native custody and exchange solution for crypto, the firm said during a conversation at Strategy World. Fong Li, president and CEO of Strategy, spoke with Amy Oldenburg, head of digital asset strategy at Morgan Stanley, about the firm's upcoming products. Morgan Stanley will first allow clients on its e-trade platform to buy and sell spot cryptocurrencies through a partnership. Last year, the bank said it was pursuing a spot Bitcoin ETF and planning to enable direct trading for clients via e-trade. And over the next year, the bank intends to develop a fully integrated custody and exchange platform. Quote, "This is just a natural progression," the executive said. "We can't just primarily rent the technology to do this. People expect Morgan Stanley, they trust our brand to be a no-fail," end quote. The planned solution would give clients legal custody of their digital assets under Morgan Stanley's oversight. The firm acknowledged that some clients will continue to prefer self-custody, particularly in Bitcoin. Oldenburg outlined their experience in emerging markets as a driver for the firm's approach to digital assets. Over 26 years at Morgan Stanley, including 13 running the firm's emerging market investing business, Oldenburg has observed early adoption of Bitcoin and other currencies in 17 of the top 20 markets globally. Quote, "As this space continues to institutionalize, we aim to provide comprehensive services to our clients," Oldenburg said. The bank is also exploring additional services, including yield, bitches, and lending products against crypto holdings. Be careful with those. Quote, "It's a natural part of the roadmap to continue to explore," the executive said. She said they are in the early stages, but are tracking momentum in decentralized finance, lending, and other crypto products. She noted that the bank manages $8 trillion in assets on its platform, and a significant portion of clients currently hold crypto off-platform. Bringing those assets onto the platform would allow the firm to offer custody, trading, and potential yield or lending services. No specific timeline has been announced. Blah, 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 blah. That's it for that article. So Morgan Stanley getting in on the institutionalization game. That should be fun. I'm sure all the folks over at Morgan Stanley won't have access to insider information, and they won't be making bets on Polymarket and Kalshi, and they won't be trading paper Bitcoin and performing price suppression on, commodities outside of the Bitcoin sphere. Surely all the guys over at Morgan Stanley, they're all above board, right? Right? Let's run the numbers. CNBC futures and commodities. Brent North Sea oil up 1.8% to $72.17 a barrel. West Texas Intermediate up 1.6 to $66.47. Natural gas acting as the hedge, down 2.5 to $2.79 per thousand cubic feet. That's low. I guess summer's coming on quick. Gasoline up 1.75 to just over $2 a barrel. Merbon crude is up 1.25 to 71.53. Shiny metal rock's not having a good day. Palladium is down 4.2. Gold is down 0.5 to 51.96 and 7 dimes. Platinum is down 3.75. Silver is down 4.6% to 86.72, and copper is down a mere 1/4%. Most of ag is in the red today. Biggest winner is wheat, 1.5% to the upside. Biggest loser is cotton. A very short row of sticks to the downside, 1.1. Live cattle is down 1.4%. Lean hogs down 1/4. Feeder cattle down 1.8%. Indices not looking good either today. They were actually up, so I guess somebody, I don't know, released data, because now the S&P is down 1%, NASDAQ is down 1.6%. The Dow is down 0.4%, and the S&P Mini is down 0.44%. And what is Bitcoin doing? Little bastard. $66,960. I just can't. We got up to, I think we actually passed $70,000 sometime last night. That would have been nice if it had held that. But $1.34 trillion of market cap is nothing to sneeze at. However, we can only purchase now 12.8 ounces of our favorite shiny metal rock with our one Bitcoin, of which there are a lot of nines. 19,994,944.91 BTC, and average fees per block 0.02 BTC, taking the fees on a per block basis. There's about 12 blocks carrying 30,000 unconfirmed transactions waiting to clear at high priority rates of 4 sats per VByte. Low priorities get you in at 1.05 zettahashes per second. Hash rate on the Bitcoin network holding firm from yesterday. From Board of Peace, yesterday's episode of Bitcoin, and I got Jason High with 250 sats. Thanks, got the show, he says. Oh, my friend Oak Grove with 1,278 sats. And he says, it was a bitch move for me to call you out on your show. Oak, it's okay, dude. Things don't bother me. You know how many people get really, really upset when they're I don't know, treated even remotely badly on social media, or, comments or a bad review or something like that. I have actually worked really hard. It's not that I don't care. I've worked really hard to be able to say, you have a right to express yourself. Oak, you get to do that shit. I mean, you're paying for it. You might as well. Now, this is what the sentence that I thought was funny. That was a feminine strategy on my part. Okay. What's going on with this feminine thing here? That's the second time you've mentioned feminine or feminine strategy. What the hell? I don't get it. Anyway, he continues. I'll send you a message and we can have a back channel. I like you and have been listening since your interview with Jack, and he's talking about Jack Spirko at the Survival Podcast. So I've heard all of your probs with the potato. I don't know if I've ever had a problem with potatoes. I'm just saying. Okay. Anyway, your next episode, I will explain why Kalshi did what you stated they did. After that, I'll start a long series, which is a surprise. I get the feeling Oak is going to rake me over the coals. Pies with 121 sats says, thank you, sir. No, thank you. Pies with another 121 sats and a whole bunch of emojis. Thank you, sir. I appreciate that. Nick Dose with 158 says, cheers. Cheers. That's the weather report. Welcome to part 2 of the news that you can use. Indiana. Bitcoin rights bill clears both chambers and awaits final signature from atlas21.com. I bring you this one. The state of Indiana has taken yet another step towards integrating digital assets into the traditional financial system. The state legislature has approved a bill that expands investment opportunities in Bitcoin and other digital assets for public pension funds, while also ensuring protections for citizens who use cryptocurrencies. On February the 25th, yesterday, House Bill 1042, titled Regulation and Investment of Cryptocurrencies, received bicameral approval after the House adopted amendments proposed by the Senate. The measure now awaits only the governor's final signature to become law. The bill, introduced by Representative Kyle Pierce, requires state-managed pension and savings plans to offer participants a self-directed brokerage account that includes at least one digital asset investment option. Interesting. Programs affected by the reform include the defined contribution plan of legislatures, the Hoosiers Start College Savings Program, as well as pension funds for public employees and teachers. This change will allow thousands of Indiana workers and public officials to diversify their retirement portfolios by including Bitcoin and other digital assets. House Bill 1042 goes beyond expanding institutional investment options. The measure also introduces safeguards for the individual rights of Indiana residents in their use of digital assets. The law prohibits state public agencies from enforcing regulations that restrict personal use of digital assets. In particular, no agency may prohibit or limit a citizen's ability to accept digital assets as payments for lawful goods and services, or to hold assets in non-custodial wallets or hardware wallets. Another key provision concerns tax treatment. The bill explicitly prohibits the state from imposing special taxes on cryptocurrency-related activities that do not also apply to other traditional financial transactions. This clause ensures equal tax treatment between Bitcoin transactions and those conducted in fiat currency, removing potential discriminatory barriers that could discourage crypto adoption within the state. With bicameral approval secured, House Bill 1042 is now on the desk of Indiana Governor Mike Braun, and if signed, the law's provisions will take effect July the 1st of this year. It's one signature away in the state of Indiana. It'll be interesting to see if he signs it. ETHZilla, and I brought you news about ETHZilla a couple of weeks ago, if not last week. They've dropped the Ethereum Treasury label in a rebrand after their share price collapse. I can't imagine why. Vince D'Aquino from Decrypt.co. Former Ethereum treasury firm ETHZilla said that it will rebrand as Forum Markets and adopt a new NASDAQ ticker next month. Wow. They're shit canning their ticker symbol, not just the name. You know, like MicroStrategy changed their name to Strategy, but the ticker symbol remained the same, MSTR. Not in this case. No, this is so bad. They need to completely do away with everything about their history. They need to scrub their history to the point that they're changing their ticker symbol. It's so freaking embarrassing. The move marks a departure from the company's earlier strategy of positioning its shares as a public proxy for Ethereum, an approach that faltered as the stock fell sharply from last year's highs and the firm reduced its crypto holdings. ETHZilla's shares peaked at $107 on August the 13th, 2025, shortly after the company announced plans to build a $425 million Ethereum treasury following a pivot from its former biotech business. These people are just jumping all over the place to try to survive. The strategy initially drew investor interest, but later unraveled as the share price declined. Investors exited, and the company began selling its assets to scale back its exposure. Shares rose 13.3% on Wednesday to $3.91 following the rebranding announcement, though the stock remains down, 96% from its August peak, according to Google. Under the Forum Markets name, the company said it plans to focus on developing tokenized products backed by real-world assets using regulated infrastructure rather than holding large crypto positions on its balance sheet. I don't know. The little man that lives in my stomach, my gut feeling says it's too late. The rebrand follows Peter Thiel's Founders Fund exiting its position in ETHZilla earlier this month, and that's the news that I brought you. The departure of a prominent early backer came as the stock slid sharply, and the firm's positioning as a publicly traded proxy for ETH exposure drew increased scrutiny. Earlier this month, that same company said that it would pivot into jet engine leasing and other other aviation-related assets to further bolster its business model and equity performance amid a weakening Ethereum price. I'm still tripping over the leasing not of jets, but of jet engines. Can I lease the landing gear? How about the ailerons? I could lease just a whole plane by its parts. Or I could just lease the jet. I'm confused. Whatever. Quote, single asset treasury strategies are highly dependent on strong market conditions and sustained equity premiums. Vincent Liu, chief investment officer at quantitative trading firm Kronos Research, said, quote, treasury-focused firms ultimately need revenue-generating businesses. Oh, no shit. And broader asset exposure to remain relevant long-term. Pausing to say, this is what I always say about strategy. You need to be able to generate revenue. You can't just be a company. Like if I got like $100 and threw it in a bank account and call myself a company and that's all I did was sit on that $100, that's not a company. That's a savings account. And it doesn't even really give me any kind of yield anymore. Anyway, such strategies like Forum's previous endeavors could be considered fragile because its value is tightly linked to network activity, thereby creating a correlation trap where purchasing power weakens during ecosystem downturns. That vulnerability is compounded by fragmentation across Ethereum's main network and its layer 2 chains, which Liu said dilutes its narrative and its premium. This condition, he said, is further undermined by the absence of hard supply cap, leaving its long-term scarcity position open to question. No shit. What have we been saying this? We don't even know how much Ethereum actually exists. Nobody can run a full Ethereum node anymore. They're too big. We don't know how much ETH is actually in existence. We've always questioned Vitalik Buterin on what's the cap. He never answers. The whole thing is a scam. Anyway, Forum Markets is expected to begin trading under the ticker symbol FRMM on March the 2nd after previously trading under the ticker ETHZ on the NASDAQ Capital Market. What a complete clusterfuck for these guys. I doubt Forum Market is going to survive to the end of this year, just saying. Now, Nvidia earnings results steady markets as AI spending debate intensifies. Sebastian Sinclair, Decrypt.co. U.S. stocks edged higher late Wednesday as investors weighed yet another blockbuster earning report from Nvidia against lingering concerns over the scale and sustainability of global AI investment. Nvidia reported a fourth quarter revenue of $68.1 billion, up from 73% from a year earlier, driven almost entirely by continued demand for data center infrastructure. Sales in that segment rose 75% to $62.3 billion, reinforcing the company's central role in artificial intelligence buildouts that has underpinned equity markets over the past year. Quote, Nvidia has sent a clear message to the market with this result that the AI infrastructure build-out is only accelerating, says Josh Gilbert, market analyst at eToro. Quote, every quarter, the skeptics line up, and quarter after quarter, Nvidia has managed to prove them wrong, end quote. Net income doubled to $43 billion, while gross margins held at about 75%, reflecting strong pricing power. The results helped lift semiconductor shares and supported a modest rebound in broader equity benchmarks after a volatile start to the week. The NASDAQ outperformed, advancing 1.26%, while the S&P 500 closed at 0.8% higher as gains in megacap technology stocks offset weakness in more cyclical sectors. Crypto also saw major valuation gains in blue chip assets, including Bitcoin and shitcoin number one, yada, yada, yada. Treasury yields fell across most maturities, signaling continued caution in rates markets, even as equities stabilized. Okay, so there's a hint that because Nvidia made such strong sales, that's proof, or evidence rather, let's say evidence, that there really is no AI bubble. I don't see how anybody can draw that conclusion because Nvidia themselves isn't providing AI. They are providing companies that provide AI with the graphics processing units that they need to run that AI, and they are more than willing to cut Nvidia a check that will clear the bank. And that's what Nvidia is doing. They're just selling chips. They are a supplier of air into the bubble. If it is a bubble, and I'm not saying it is, I don't know. It kind of looks a little bubbly. It looks a little frothy. But then again, that was the whole thing behind the internet. I'm using the internet to speak to you today, so it's not like the internet went away in the 2000 to 2001 debacle that was the complete .com crash. Everybody, oh, see, we told you the internet was dumb. It had nothing to do with the internet. It had everything to do with the people piling in, trying to figure out a way to make a buck without doing any real, actual, substantial work. And the same shit's here. But Nvidia themselves, that's not a signal for me. That's not a signal either way. It doesn't tell me either way whether or not AI is a bubble or that the demand for the chips means that AI is not a bubble. All Nvidia is doing is building chips and selling chips. They have no other ties to the AI industry, unless if somebody can, show me where Nvidia has their own AI and that they are going to start shifting their chip production over to fortifying their own brand of AI, then I would say, yeah, we may actually have a definite bubble on our hands here. So right now I'm neutral as to whether or not AI is a bubble, but the people that are saying look at Nvidia's earnings, that is proof, if evidence, if not direct proof that there is no AI bubble. Be very careful of that language. Nvidia, in fact, doesn't have very much to do with AI except selling the chips. Just be careful how you process that information. All right, let's see, where are we at? Discord wants your face, and here's why you should say no, and this is going to round us out for the end of the day. Rod is writing this one for Bitcoin Magazine. Discord's move to require age verification through facial recognition and ID scans arrives wrapped in the language of protection, but it's actually a blueprint for something more troubling: the normalization of surveillance in the name of safety. There's no real way to know how many Bitcoin-focused Discord groups there are, but there's no doubt that Discord is an often reached for tool in our ecosystem's toolbox. The rationales presented by Discord are, by now, familiar. But while KYC requirements, as stated, serve noble purposes, they are little more than ratcheting screws in practice. Each requirement normalizes the next. Each new baseline becomes tomorrow's minimum. The Overton window moves. Our movement is skeptical of concentrated power no matter its source, particularly the power to know, track, and categorize citizens. This is true whether that power comes from governments, corporations, and, more narrowly, online community platforms. Discord presents its move as inevitable. It's not. I know that Discord isn't trying to harm anyone. The company genuinely believes it's protecting users, but good intentions don't prevent the drift. They accelerate it. There's also the risk that the collected data becomes exposed. Luckily, there are alternatives. As with Linux and even Bitcoin itself, the open source approach presents the solution. Alternatives that invert the power dynamic where users control their keys and platforms can't are quietly gaining traction. Open source platforms built on federation models, services like Fedi, don't require identity verification to participate. They're privacy by design, not privacy theater. They may be slower to scale and lack Discord's network effects, but they're also immune to the pressure that turns safety features into surveillance infrastructure. Additionally, nostr, a censorship-resistant protocol built on cryptographic keys instead of usernames and passwords, represents another alternative. With nostr, you don't create an account with the company, but rather a key pair. That key is yours. no verification, no ID, no biometrics, no company between you and your data. The protocol is still young, the user experience needs work, but the architecture is sound. You own your identity, not a platform. This matters more than it sounds. On Discord, your account is Discord's property. On Nostr, your account is mathematically your property. You can move between relay servers, the infrastructure layer, without losing your identity or your social graph. You can't be deplatformed because there's no platform to deplatform you from. And it's not just Discord, it's TikTok facing potential regulation. It's Instagram adding identity verification for creators. It's the entire social internet moving inch by inch toward a future where participation requires documentation. We're at an inflection point. Over the next few years, communities like Bitcoin Park's 1,000 plus person Discord will migrate to alternatives. We're slowly moving ours across multiple platforms. Fedi for federated communication, Nostr for censorship-resistant social layers. This is not because our members are doing anything wrong, and most certainly not because we have something to hide. We believe people deserve infrastructure that respects privacy and sovereignty as principles. These tools are unglamorous and slower to adopt, but they're getting better. And they're the only infrastructure that genuinely inverts the power dynamic, putting users in control rather than platforms. So we're choosing tools that cannot be turned off, not because we're paranoid, but because on behalf of the communities we serve, we're paying attention. And this is written by Rod, one of the founders of Bitcoin Park, as a partner of Matt Odell, if you're wondering who Rod was. And yeah, I use Nostr constantly. I'm on Nostr more than any other platform. I mean, I go to X. I'll go to X later on today. I was there earlier today looking at stuff, but my platform of choice, it's not even, and again, not a platform, it's a protocol. My protocol of choice is Nostr. I can say whatever I want. I can call somebody, I can say, fuck you, you're a racist. I mean, if I had said that on Twitter of old, before Elon Musk bought it, I would have gotten at least flagged because somebody would have said, oh, you're my feelings. On Nostr, dude, there is no hurt chamber for you to go cry in. There just isn't. I mean, look at Oak Grove. He raked me over the coals yesterday, and he's probably going to do it again today. I'm not going to sit here and fucking cry about it. There's nothing to cry about. Somebody's got an opinion. Okay, whatever. I'm tired of letting other people control what opinion I'm allowed to voice, or rather, what opinion of mine other people are allowed to be exposed to. Because I can say whatever the fuck I want. But X controls who gets to see it. In Nostr, it is completely different. And if you have not gotten on Nostr yet, you need to go to nstart.me. N is in Nostr, or Nancy, START, nstart.me. It's like, think of it like as a guided, interactive presentation with slides, but after every slide, you're prompted to do something. And at the end of, let's say, if you read all the way through and try to diligently understand what's going on, 5 minutes, and you end up with what? You end up on Nostr. You end up like with a couple of followers. You end up with a couple of people that you follow. You end up with a couple of notes that you've posted. You get to look at the interface. You get to actually kind of see what the hell's going on with Nostr. And it's a guided tour. This is one of the best tools, one of the best onboarding / training tools for the digital age that I've ever seen. nstart.me. Take 5 minutes. I'm asking for 5 minutes of your day here to go claim your namespace on the Nostr protocol. You cannot be deleted and you cannot be censored. The only people that can censor you are people that just will mute your account. And I've got many accounts muted. I don't want to hear that crap. I don't want to see that crap. So I just hit mute, select indefinite for the time span, and guess what? I never hear from them again. But anybody who does want to hear from them can. And I have zero to say about that. I cannot tell or direct or and the people, there's no owner of the protocol, so nobody is able to actually say, I don't believe that this Nostr account should be allowed to post and we're going to just delete it. Impossible. It's mathematically impossible to do this with the Nostr protocol, not a platform. Nstart.m, as in Mary, E. Me. It's me, buddy. Me. Nstart.me. Go there, take 5 minutes, claim your namespace on the one platform on the planet left that has sovereignty, dignity, and intelligence as part of its building base. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.